Very strong economic growth numbers for this year, the strongest for decades, maybe since the invention of GDP. How would you characterise them? Is this a boom we're in at the moment, or something else?
Well, I think two sort of reflections on it. One, I mean, it is a very strong recovery, and thank goodness in a way, because of what we went through last year with an unprecedented fall in activity in the economy. So that's the good news, that it is a strong recovery. I think you would expect a central bank governor to say this. I mean, the caution is, of course, that what it does is take us back in terms of the level of activity in the economy, we think, by the end of this year, to where we were at the end of 2019, i.e. pre-COVID. So very good news on the recovery, but I'm afraid we do have to sort of put it into perspective and say, if we get back to where we were in 2019 by the end of this year, that is still 2 years with no growth in it.
When you look at the long-term growth horizon, still after this very strong growth in this year and pretty strong growth next year as well, it's still relatively weak, the growth number in 2023. So, has the kind of long-term trend growth rate, our ability to grow in this economy, potentially been damaged by COVID? Were we always heading for that weakness?
Well, in many ways, of course, where we get back to on that projection is where we were before, with a relatively weak longer-term trend rate of growth. The trend rate of growth has fallen over the last 20, 30 years. I remember when I was supporting the Monetary Policy Committee in its early days, we always used to think around about 2.25% was probably a UK trend rate of growth, and of course it's been lower than that, certainly since the financial crisis. So I think...
Where is it now, would you say, trend growth? 1.5?
It's probably somewhere around 1.75, not more than that, probably.
And that must be worrying long term.
Yes, and I think that brings us back to, two reflections on that. One of the key things that we need to look at going forwards is what we can do to raise productivity growth. And to do that, I think we've got to look at both private and public investment, because we've had very weak productivity growth since the financial crisis. We've had variable investment over the period. Now, one thing that should benefit that investment, there is a relationship between the level of uncertainty people have in investment, because it's always, in a sense, there's an incentive to delay and wait. Lower uncertainty, related to COVID and Brexit, should help in that respect. But a big reason why raising the trend rate of growth is important is of course, how we deal with managing the inherited burden of debt from COVID. It will be much easier to manage that, both for companies and for government, by the way, to manage that debt burden with stronger underlying growth.
But just in that terms of the economic forecast, one analogy might be 1927. There was quite a big bounce back after the general strike. And in a sense, that was kind of an enforced shutdown of parts of the economy, and then it bounced back. But I wonder, if that analogy might lead people to think, oh, are we in for another roaring 20s after we've even got through this, with all of this fiscal, monetary impetus going around the economy? So what do you see out there?
Well, because one of the interesting things about much of the 1920s is that they didn't actually have supportive and loose fiscal and monetary policy, actually. Because it was obviously a big move to get back onto the gold standard, not necessarily one of the better decisions in the history of British economic policy. So I don't think the analogy in that sense is sort of particularly.
But you know what I mean? That it's a way to the races now. People spending all those savings and so on.
Well, I think you could sort of generalise the point and say, once you get into a habit, will it all get out of hand? I don't think there's any reason to believe that at the moment. But look, we will be watching this very carefully. You can take that for granted.